Hi, this is Lakhi Singh, the property fixer, here to fix you and help you grow your property and your business affairs to the next level. So if you're looking for knowledge and insights about how to get involved in property, solve your problems about scalability in your property business, then do watch our 20-minute clips. We've taken them from hundreds and, well, thousands of videos that we've taken over the last 6 months, and we've broken them into simple chunks which can make them useful for you. So do watch and do subscribe to our YouTube channel underneath as well.
Good morning. This is Lakhi Singh on Drive Time. We've got a bit of a lockdown situation this year, and we've also got a bit of a blackout now, so you can't really see me. And the reason being is that I'm actually have to attend to a couple of other matters while we're on air, primarily Drive Time. So what I'm going to do is I'm going to be introducing to everybody today's topic, which is why there's going to be a crash in 2021 in the property market, and basically the reasons why this will happen. So you've got a very interesting guest today, Rajesh Malhotra, who's also on now. Rajesh, can you hear us?
Yeah.
Hello,
Yes,
Rajesh.
I can hear you, Lucky.
Kaise hain? Fantastic. Well, it's a very interesting topic for today. Can you hear me okay? We've got slight
interesting topic,
actually.
yeah. Can you hear me okay?
I'm fine. So before we go on, so Rajesh, tell me, what's the weather like in your part of town? Whereabouts are you?
I'm in the not so sunny side of Sutton, in between Wimbledon and Croydon, in the deep heart of Surrey.
Wow, very posh. So does everybody speak with a
UK.
very posh accent over there? Like, good morning, Rajesh, how are you?
Good morning, Lucky. How are you doing?
I'm very well. And how's it over there in Surrey this morning?
And it's okay. It's very mild over here. How are you doing in the is it the square mile? Is that where you're based at the moment?
Yeah, I'm in Kensington at the moment. But yeah, the weather's a tiny bit rainy.
Kensington, yes, yeah.
Tiny bit drizzly. But it's all happening over here anyway.
Yeah.
So we're gonna it's your chance to shine today, because you're our main guest that was gonna cheer today couldn't make it, but got Rajesh Malhotra, the man with many talents, on today to give us his knowledge around property, etc., etc. So before we go, and we got a big shout out to a few people. Got Meena Kapoor, Berhan Noor, Adnan Pasha. Got I think a regular viewers of Mandy Sandhu, Sonia Lambert, quite a few others. I'm sure we're getting a lot of shout outs. So anyway, all of you, hope you're having a great morning.
Thank you to everyone who's tuning in, and shout out to everyone.
Yeah, today I have to do my VJ Sal thing, and it's a slightly different communication. I normally like to be in the back seat, just let VJ Sal take control of the show. But nevertheless, Lakhi Singh, the fixer, is here to fix things, because VJ Sal's the helicopter's stranded because one of the blades is rotating the wrong way around. So I think he's having to get out and fix it. So that should be quite interesting. We may be able to get him come back on. It'll be quite interesting.
Okay, I'll take it. The pilot's day off, is it?
Yeah, probably. I think VJ Sal
it's all good. It's all good.
Left to fly on his own, I think. Okay, so Rajesh, tell me a little bit. How's your week been, and the thrust of work, business, everything good? What's new with you?
Basically, I've been doing watching your drive time, 8 a.m. the property fixer, learning a lot, watching them every day. That's what I've been doing, and learning myself and researching about what's happening.
Fantastic. Okay, so you're probably the
challenging times, economic times. Just to see what's happening property business in general.
I mean, are you finding that many people are affected by in terms of mental health with this pandemic? Or I think that's going to be the major issue, people being locked up.
Definitely, yeah, definitely.
I'm already talking to people that ring through during the day about becoming an associate of the company or looking for a job. But there seem to be a lot of demoralized people out there. It's like they've got a psychological battle against their they've got a psychological battle with the pandemic as well as their situation, because they've got they can't find a job. And I mean, we've advertised for a couple of jobs and we've had something like unprecedented. I think we had about 100 CVs for just over in about 3 or 4 hours.
Wow.
So that's why, in fact, I'm probably just literally being pinged one now. So I think there are very few companies that are growing. I mean, I'm working with a few high, fast growth sort of companies which are recruiting about 20, 30 staff. We're also recruiting and growing. So I think we're probably about one of the only companies that's still growing in a pandemic, because the nature of the work we do is we solve problems for people with properties, businesses, or trying to find a new income. So it's been like super crazy busy. So let's go to the main topic. What are the top 5 reasons the property market is going to crash in 21? What's your take on it, Raj, before I give you my opinion, considering I'm going to be host and sort of interviewee, part interviewee today. So what's your thoughts on it? It'd be interesting to get your take.
Okay. Well, I actually think that although ironically the property market, I actually think because one of the reasons is interest rates are low, it's easy access to mortgages. I mean, it's been the highest things on mortgages, but also that the stamp duty holiday, they're looking to extend it. Finance is easy, interest rates are low, and also the holiday of the stamp duty, but it won't last forever. It will come to an end. It will affect the property market, and we're not even on the topic of Brexit. So there are a lot of factors that are going to make the property market, I wouldn't say there'll be a crash as such. It will be, for want of a better word, subdued. There will be a correction in the market, I'm sure, because I've been doing a lot of research myself, talking to people like yourself who are property market, but also brushing up on my own knowledge. And the conclusion I come up with is that London has always been quite pricey, but once the other areas of the UK start coming down, I think it'll slowly seep into London as well. It could happen in 3 months' time, 6 months' time, or 12 months' time. And like I said, Brexit hasn't even been, it's just a footnote at the moment because of this terrible pandemic. And unfortunately, their jobs. I mean, just recently, ASOS bore out the brands of the Arcadia Group, but unfortunately, for all the people that were working, they've lost their jobs, and I feel very sad, and I sympathise for them, because I still think there should be a high street. I don't think that if people haven't got jobs, how are they going to pay the mortgages as well? Very scary times indeed. Really scary.
Okay, what I'm going to do is you brought out a lot of questions there regarding different things which will affect a potential crash in 21. So let's quickly break them down and probably dissect some of the points you made. So let's try and keep it to about 5 key points, and I think we can always do the additions afterwards. So one fundamental point is interest rates.
Yeah, sure.
Second fundamental point is Brexit and its implications. Third fundamental point is the spillover from the pandemic. Fourth fundamental point, well, is that there's 800 billion of funds that have been invested into dealing with the you could say the aftermath or the pandemic, which is sort of links to that point anyway.
Yes.
And then the fifth one is I would say a global meltdown, because no economy is actually working at its optimum because of the nature of the pandemic. And there's a sixth point, which is that the additional strain that could be coming from COVID-19 could be a lot more lethal. And if that does occur,
definitely,
it's better to actually work on the basis that if somebody's trying to run a business, that you've got to be thinking out of the box and looking at all the various angles in terms of what could happen in the worst case scenario, than to assume the best. So if you're trying to run a business out there, you're trying to think, okay, well, I've got nothing to worry about, vaccines coming in, I'm going to be all right. You can't really be thinking like that or waiting for things to happen. So I was talking to somebody yesterday who's involved in the fitness industry, and I just said to him, look, they said they can't really go and meet people or do their normal fitness classes. I said, you've got to start thinking outside the box and just imagine that nothing's going to come back to normal for 3 years. Then if that's the case, then you need to be looking at another way of running your business or thinking around it. But if you don't think quickly enough, you're going to find that you're going to be out of money within 2-3 months.
Yeah.
So do you want to?
No, exactly. These are. I was just saying, I echo your sentiments exactly, especially with the last topic that you talked to about the fitness. Have to look outside the box and find ways of, keeping their client, and also because cash flow is very vital in a business. You could be a profitable business, but if you don't have cash flow, you find that it leads to a slow or gradual lead to. So I agree with you totally on these points.
So to dissect those points further, I mean, the property market is held up by a lot of. I think the other point you raised was around stamp duty. I think Rishi Sunak has confirmed, I think about a couple of weeks ago, from what I hear, is that he's definitely not going to bring back stamp duty cut. So that's actually he's announced that the stamp duty cut won't remain, basically. Okay, so I think
yes,
that's 100% clear indication that you can't trust the property market to be propped up any longer. So that's actually probably a fundamental one, because it's been propped up temporarily by that.
Yeah.
Second thing is that a lot of people got bounced back, so there's lots of money flooded into the country. A lot of those, it's been about a year, so a lot of that's probably been spent and put into the economy to give it an artificial bounce, hence the bounce back, So that's the second reason you can sort of say. And I think third reason is that third reason I'm thinking is that there are going to be a lot of glitches in terms of getting businesses back up and running in the same way as they were before in terms of trade. So you're going to get a lot less money coming into the country, and it's going to take time for businesses to create that route again. But their costs of cost of being in certain markets in Europe now is going to be a lot higher. They're going to have to pay certain tax and customs excise type fees that they weren't paying before because of sort of say easy access through borders. So you may there's going to be an impact from that in terms of circulation of money. So the list goes on. I think we've got about 10 really things that are going on, which means not only are we going to have a property crash, there could be, I think there's a gentleman on Question Time that came on. He said that this is going to be the worst. This is actually, we're in a depression. He said this is the biggest crash in 300 years in the UK. He said we're in a mass depression.
Yeah.
I think I might have sent you that clip. I'm not sure if I did.
Yeah.
What's your take on it? Do you think we're in a depression, Raj?
Might have called you.
Sorry?
Well, I don't know if if your viewers know this, but a recession is when they have two sharp minus negative circumstances. So I actually on Question Time that we probably are in a depression, and we don't know how it lasts. It might last 3 years, like you said. It might last 5 years, and we haven't even discussed, like you said, with the Brexit. I don't know if you know that trucks and lorries are already getting stuck trying to come into the UK through the borders. It's causing a lot of problems. We've got the COVID-19 coronavirus. We've got redundancies. High Street is changing the landscape, not just online, but because of the corona aspect of Brexit. Someone sent me something on LinkedIn about how much debt that Britain owes at the moment, and I think it's almost key. So we own more as a country, as a nation, than our gross domestic product, which is very, very concerning. This is another reason why the government keeps borrowing, so to do what's called quantitative easing. But I don't think it's going to work. I think it's going to take time for it to seep into the economy. So we're what's called, I would say, a point about the property market. The property market is dependent on a lot of conditions. So if there's good or high unemployment, that means landlords let property portfolios can find tenancy. But with people working from home and not knowing when they'll go back, and the government will like flip-flopping on, then we're easing restrictions, then we're going back on lockdown. There doesn't seem to be any consistent consensus. And there are a lot of people out there who also, should I go out? Should I not go out? They're very confused, and obviously this affects their mental health. A lot of kids at home, because sometimes the schools are open, sometimes they're not open, confined living space. It causes issues and problems. The other thing is the terrible tragedy that the COVID has played out. I was watching a program last night about the lives lost, and it was like really emotional. And I'm not saying anyone's to blame, but I think if the government got a handle on this last year, Germany and other countries took this very seriously, instead of focusing on Brexit. Brexit was going to happen anyway, but Brexit doesn't mean that you're losing your lives. And now the government are in a bit of a quandary. It's still, if you go out in your local high street, there are people there. It's like ghost towns, and this is why the rise of online is getting more and more. But if high streets disappear, and I know I'm labouring my point a bit, streets disappear, it usually means an increase in crime and unemployment, because the high street is not just a place where you go shopping. it's a sort of community. You go see with the pandemic at the moment, that's been severely restricted. So people are using online things like StreamYard and Zoom, and this will affect the property market.
Okay.
That buy property and wait, but I would actually wait until the property.
So I think
The property market sort of stabilised.
Okay, well, I think we realise that there's going to be a dip or a crash, but I think a crash is definitely looming. Question is going to be how much of a percentage fall will be there in property in the next 2 or 3 years. What's your take on it?